Hello, guys and gals. Welcome back to my YouTube channel, Richard Williams Asset Protector. Look, welcome to 2025. I'm super excited about all the things that God has done in my life, that He's doing. I'm even more excited for what God is doing in your life, the growth in your business, the new marriage, children graduating, your child graduating from high school or college. You're about to get that promotion or you just got that promotion. And as you continue through life, speak these things over yourself every day. Get up in the morning, pray. Do affirmations, do visualizations. See yourself where you want to be, and that's the best way to get there. And that is also the fastest way. I want to talk to you this morning about life insurance as it refers to our young children and some of our grown children too. more often than not, I'm finding parents. First of all, what is a parent? Who is a parent? Because sometimes we're looking for uncles and aunts and godparents to do things that we should be doing. But according to Webster defines a parent as a person that gives birth, right? So it is a mother typically, right? But a father can also be a parent too, because you put a comma behind birth. Comma is one thing that a parent does, but also a parent is responsible for raising the child. And even if they are not responsible for raising the child, if they chose that position or they found themselves somehow in that position because of some calamity or something that happened in the family, then still they are a parent. So they're responsible for raising that child and responsible for the care of that child, and they are accountable for that child's upbringing. Now, conversely, a parent is also a company that owns another company. Okay? So XYZ company owns ABC company. So then that's the parent company, right? So we're not talking about parent companies right now. We're talking about individuals and families. That's what this topic is about. More often than not, children, young people are dying with no health insurance. With no life insurance. They're dying and with health insurance too. And some of the reasons why we're dying prematurely is because we don't have health insurance. But that's not what I'm talking about. I'm talking to you about death insurance, life insurance. Okay? If someone passes away, there's death insurance that pays a benefit. Life insurance is insurance on your life that you could actually borrow from. You could build cash value. You could become your own banker, what we call infinite banking system. You could use that money to pay down debt, even in life. Or if someone passes away, the policy also provides a death benefit. So let me give you an example. Let's say Henry and Magnolia has a son, and his name is James. Henry and Magnolia both have life insurance policies, but they have separate life insurance policies, which is how I recommend you do it. That's just the easiest way to do it, because once you pass away, then you don't have to worry about other things coming up, because some insurances, life insurances, requires both individuals to be deceased before that benefit could be paid. So the easiest way, the best way, the surefire way to make sure that your family is not in a situation where one parent dies and the other didn't, then they can't get the money. The best way, and it doesn't cost anything more to do this, it just makes sense, okay? Each one have one. In other words, you have your policy and your husband have his policy, okay? So Henry and Magnolia are killed in an accident. James is the beneficiary, that's the only son. They have a life insurance policy. have him as the beneficiary, James now can reap a beneficiary check in the form of money that James can use now to pay down some debt. And maybe he lives with his parents. He could pay off the mortgage on the house, catch up the bills, pay medical bills if Magnolia and Henry had medical bills, pay on his student loan, pay it down or pay it off, right? And maintain the continuity of life while going through the phase of bereavement and grieving. And now James can properly grieve his family, his parents, without worrying about a GoFundMe. How am I going to bury my mom and dad? Without worrying about, do I have to get out of the family home, which I grew up in? And it goes off to, out of the estate into the state of which you live in. So just think about that. Because if you don't have that insurance, you're going to be screwed. Simple as that. And so then you have to go for a GoFundMe, and that's just plain foolishness. Because we live through life, we buy everything we want, we balling, we talking about getting a bag, we wearing expensive clothes. You know what I'm talking about. Those people that you see that are carrying a Gucci purse and sitting at the bus stop, carrying a Louis Vuitton and getting on the bus, getting on public transportation. Chris Louboutin shoes and don't even have a ride getting in the back of an Uber. And I'm not talking about Ubering to and from the airport. I'm talking about going to work and going to pick up, going to the grocery store to pick up groceries, things like that, just because you don't have the means to do that. Well, you could take a portion of that money instead of buying the Chris Louboutin purse or the Louis Vuitton bag. You could take a portion of that money and put into life insurance. And you could do a couple things. Instead of you buying into Chris Louboutin or Gucci, then you are putting money up for yourself and for your future family. And even if you get sick, you get critical ill, terminal ill, chronic illness, right? Meaning that you cannot do 2 out of 6 daily functions, right? And I mean things like toileting, going to the bathroom by yourself, walking, taking a bath, feeding yourself, being able to hold your urine or your excrements. You have to wear a pamper and you can't hold that stuff. Then now you're getting into a place now where you can actually, that event can cause you to actually turn on one of the features of your life insurance. Meaning that you can get a portion of that death benefit while you are living. And then what's left over, you can give that to your beneficiary. See, in this case, Magnolia and Henry can now give money or leave an inheritance to James, and this can help James throughout his life, making sure his mom and dad are put away, making sure that bills and things are caught up, and then having some money to live off. Does that make sense to you? I hope so. Now, death insurance. We're talking about final expense or term life insurance policy, which is a policy that will create an event of giving you or giving an inheritance to the beneficiary upon the death of the insured. So if I have life insurance on me, I have a policy, the policy is current, I'm paying on the policy, I don't let it lapse, and then I should perish. If I should perish, then I have beneficiaries that are in place. These are where I want this money to go, who I want to receive this money. And another thing, sometimes we have too much insurance, right? You needed $3 million worth of insurance 20 years ago, but now your children are grown. Do you really need to be paying that high cost insurance? What if you drop that down to something more reasonable, something that fits? Because every time you go to the shoe store and buy shoes, always try them on. Now, if you're in a rush and you don't have time to do that, or maybe the type of outfit or shoes you're wearing, I get it. You don't try on stuff. You come home and try it on. You purchase it based on your size. But, all shoes are not created equally, and all clothes are not created equal. You see what I'm saying? So you get the chance to try that out first. But anyway, when it comes to life insurance, look at what fits your budget, what fits your lifestyle. Don't keep that $3 million insurance. Don't keep that $1 million insurance. Don't keep that $500,000 insurance if you don't need it. Now, I'm not telling you to cancel your policy. What I'm saying is to revisit your situation, see if this is something that you actually need to be doing, and then do it, right? You go back and look at your finances every year. You look at your bank account every month. If you're like me, you look at it every day. So we're often assessing and reassessing things, but some things we don't reassess. You go back and get your driver's license every 5 years or 10 years, depending on what state you live in, right? And the reason why you do that is because you have to go back, take a test, right? Go back before those authorities that issue that license to see if you need a different type of license. Maybe you got much older and your vision is impaired, and now you need a license with eyeglasses, right? I wear glasses a lot, mostly for image, but these are mostly reading glasses, but I can wear them all the time. It's going to come a point in time in my life where I'm going to need these bad boys just to take that license test. You see what I'm saying? So if I need them to read now, I'm going to need them later to read signs and things of that nature. So therefore, we have to go back periodically before the examiner and be examined. Every 1 to 2 years, you go to the doctor. You get examined to see what's going on with your health inside. You may feel good, but you may have a tumor growing. And by you going to the doctor on a regular basis, a routine basis, 1 to 2 years, then you have the chance to catch it, right? Because we know if we catch it early intervention, then we have a better chance of becoming healthy. And if it's something that's life-threatening, then we have a better chance of getting rid of that and maintaining our longevity in life. So, life insurance, you need it. You should have it. It makes sense to have it. When you don't have it, then now you have to go and ask strangers to help you bury someone that could have done it themselves. And you would be surprised. Just because your next door neighbor is driving a Lexus or a Bentley doesn't mean that they have life insurance. And just because your neighbor is driving a Ford Escort, Ford Festiva, I don't care, Hyundai Sonata or Elantra, it doesn't mean that they don't have their shift together. Oftentimes, the people who are living that very extravagant life, they be the very ones that are behind on stuff. They're living on credit cards. They're living day to day, and they're struggling. Now, if you're in a situation like that, does it make sense? See, what rich people do is whenever they lose someone, grandmother or someone, that's why you see these families thriving, because they have the conversations, they get the insurance. One thing my mama always told us is get life insurance on me, because one day I'm still going to die. It doesn't matter if you don't want to talk about it. I'm still going to die. You're still not going to have me. It makes sense to get the life insurance to help you in life. That's what my mother used to tell us all the time. If you are a mother or father, you are a parent, and you don't want to talk to your children about this because you don't want to die, it doesn't matter whether you're afraid to die. It doesn't matter whether you want to talk about it or not. you are still going to die. It's not if you're going to die, but when you die. And you will. I promise you that. I don't even know you, but there's one promise that I'm going to make to you is that you are going to check out. You're going to die. You're going to kick the bucket. We all going to do that. And when you do that, the question you must ask yourself before that happens, right now, while you're in your right frame of mind, while you're looking at this video and listening to me, you're searching your heart. You're thinking whatever you're thinking in your back of your mind, that's okay. But you are searching your heart. And at the end of the day, do you disagree with me that you should have insurance or not have insurance? Or do you agree with me that you should have insurance? It's one of the best blessings that you can leave to your family, your beneficiaries. It's one of the best inheritance. Your earrings, your heirlooms, your great-great-great-grandmother's picture frame, or some whatnot that you have as in your house to accent your house. That is great. And those things can be liquidated. But what if you can be a blessing to jumpstart your family out of poverty, beyond the middle class, catapult your wealth to lead generational wealth? See, this works for everybody, whether you're white, black, if you're dark skinned, if you're light skinned, if you look good like me or you don't. Doesn't matter. Doesn't matter if you're tall or short. Now, if you're obese, it's gonna matter with the rate of what they're charging, because you're what? A higher risk. And the higher the risk is for the insurance company, the more you're gonna have to pay. So how can you mitigate that risk factor if you're young? By buying insurance now while you're young and keeping it for the rest of your life. You see, you're as young right now as you'll ever be. Tomorrow you're going to be older. Tomorrow somebody's going to have a birthday. And here's some more news I want to share with you. If you're within 6 months of your birthday, your next birthday, so let's say if you're 25 years old and your birthday is going to be within 6 months, let's say this is January, let's say your birthday is going to be in June. Well, you are already now 26 years old. You're a year older. If you're 26, you're 27. If you're 50, you're 51. Whatever the age is, just add a year on to it, because they're looking at you in 6-month increments. Regardless if they're saying years, when we run the illustrations, when we submit the application, many of the applications will automatically put that in there. Some of them will allow us to leave you at your current age, but on the back end, you see, underwriting has to go through underwriting. And when it goes through underwriting, then they're going to bump you up. Now, the insurance company is not in business to make you and your family rich. Let's just make that real clear. The insurance company is there to make themselves rich. And so when it comes to the best interest, they have their own best interest in mind, not yours. With me as an agent, I work with a plethora of insurance companies, dozens of insurance companies. I have access to every insurance company that's out there. Now, I'm not going to write for all the insurance companies. Just like you don't want to do all that work to pay for your insurance, why would I be with all of those companies and not writing with all those companies? I have companies that I write with that are the best companies, that I found to be the best companies, the best of the best, offering the best rates, offering you the best death benefit for that rate, offering you the best cash accumulation value, offering you fees that are not through the roof. And some of them do have high fees, but those who have high fees, they may yield a higher return on your money, okay? So when you put in a certain amount of money, let's say for an IUL, you want to get back a certain amount of money, right? So in that case, we will do a fixed index IUL, right? So we kind of know what the index is going to be. If you're in a variable product and you've been losing money, stop what you're doing and drop a comment. Look, I'm not making money with it. This thing is costing me. I'm losing. I'm aging out, and I'm not making money. Get with whoever it is that sold you the policy. If considering that they know what they're doing. If they don't, reach out to me, and I'll put you with I'll do it or put you in one of my team members. But we'll look at it again. You're going back every year or two and looking at it and seeing if it makes sense. If it don't make sense, get out of it. My business partner used to say to me, if it's not making dollars, it's not making sense. So now you have a breakdown of the difference between life insurance on one hand and death insurance on the other hand. And depending on which situation you're in, your life, your age, your health, your income situation, life insurance is always the best way to go, especially if you're doing well. If you're still making good money, this is a way you can put money aside to grow your money. So in the future, you can look back and say, I put in $100,000 and I got back $1 million. It just makes sense. And there are ways that can be done. It's just a matter of you looking into it. When you know better, you do better. So now that you know better, you can look into it, do your homework, do your due diligence. If you can't figure it out and you need more information, reach out to me. You can either drop something in the comments, right? Or you can go directly to my website and you can book a time to talk with me. My website is www.unitedprospera. It's like prosperity, but Prospera, PROSPERA.com. And there's a link below where you can click on my page and it'll take you right to my website, and you don't even have to try to figure it out. Look, I thank you for your time. Be sure to subscribe, like, and share this information with somebody. I look forward to seeing you on the next video or talking to you on the next video. Meanwhile, take good care of yourself and each other.